welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Robert Broad. Remember that there is part of life for which you are the explanation. That's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials down 195, NASDAQ off 82, S&P's off 17, gold contract down $27.10, trading at $1,182 an ounce. Silver down 57 cents at $16.13 an ounce. Platinum off 12 bucks at $1,142 an ounce. Copper up 8 pennies at $2.87 a pound. Light sweet crude up $1 at $59.61 a barrel. Bonds, we had the 10-year down 2 ticks, 128.14. 30-year down 7 at 159.21. Both of those folks went into the March 6th downdraft, rejected lower price. You can expect bonds are going to pick up and go higher now. Why? Because the market's going to get toasted, roasted, all of the above. Each one of these indices came down with monster volume. King dollar down at 417 ticks, trading at 94.90. You had the euro up 89 at 112.18, and the yen up 38 at 119.40. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We start with the SPY. What do you have with the SPY? SPY traded to 207.62. You've done 146 million shares. Monster volume on the way down. Bottom line, the level that we're at right now, folks, has not only brought you into the level where you can go after the swing lows from March, but you're in the lower range. We had two separate ranges here. Well, there's a lot of ranges, but we had two large ranges that the market was trading in for 3 months apiece. The S&P in all of 4 days goes into the lower range. What does that set up? That sets up 197, and right now we're at 208. The NDX 100, we take a look at the 3 Qs. What do you have with the 3 Qs? Same setup with the 3 Qs. Bottom line, you had expansion with volume. 3 Qs right now are trading at 107.63. You come down with 39 million shares. Now, it'll be 106.24 for the 3 Qs to get in that lower range. Right now, the 3 Qs are basically saying that we're going to want to go to 104.24. The IWM, whole different ball game with the IWM, folks. Small caps, toasted, roasted, all of the above. Took it south quick. The doors and the small caps are just not big enough for anyone to get out, never mind the amount of folks that want to get out. We did 65 million shares in the IWM. We made highs, folks, at 37. Where are we going? Bottom line, October 15th swing low. This is pretty sick. Now, I suspect that the small cap is going to be the first one down into this October 15th swing low. It's not in the lower range yet. It would have to get inside 121. Oh, it did. Yeah, it's 121.18. It did it. It's a 121.18 inside 121.41's in the lower range. Bottom line, which is game right now, which is just a mind blower in 1 day. You're at 121. Well, the highs. Let me put this in a weekly for a second. This is, man, when that elevator goes down, it goes down fast. We take this, we put this on a weekly, and we look at the high of the, so small caps are down $2.62 today. The high of the low is 109.22. That's where this baby is heading. Gold contract. What do we have with gold? They whack gold as they whack the markets. Bottom line, though, I suspect what you're going to see out here is that gold still wants higher price. What we have is this. And this is where the divergence comes and the correlations come. Gold contract goes south today, $27, has 195,000 contracts, which is huge, slightly lighter than we went up, 207. I suspect gold's going to try to get gold into tomorrow. The 1174 is game. We're at 1182. You take a look at the GLD. So you have the contract, of course, is the physical contract. The GLD trades at 10% of the price of gold, the ETF structure. We did 9.4 million shares. That's not enough to croak it, folks. You need about over 12.5. The 9.4, we got down to 112.96. We closed at 113.47. The 112.87 area is where we came off the bottom. It's going to need more than that in order to croak it. And the way that it actually did it today is saying that it actually wants to go up. I'm suspecting that what we have out here, because of Friday, you'll see the croak first on the way down. You'll get light volume tomorrow. They'll try to take it apart. It'll reject that lower level. And by the time we finish tomorrow, more than likely you're going to be even, or you very well may be up. And why am I going like that? Okay, so now let's go over to the King Dollar. King Dollar, folks, has come off the highs. They did it with volume 3 separate times. They retraced with lighter volume. King Dollar looks to me that after a year and a half of going up is doing a natural retracement, because that's what markets love to do. And if you remember what King Dollar had done, it had done a 1 to 2 ABC structure on the way up. And this is just a classic. If you're into Fibonacci expansion contraction, as soon as you do over a 1 to 1.618, your probability is dramatic that you're going to do a change of trend, a long-term change of trend, whether that's at 1 to 1.618 down or 1.1 to 688 up. It's pretty wild how it shakes out. So King Dollar right now is at 94.85. It's coming into where it should get a little bounce out here. Why? Because we traded from the 23rd of January over to February 26th. It totally makes sense. And I suspect what you're going to get, you know, tomorrow I think you're going to see lower price. That'll bounce the gold market, the metal market around a bit. They'll take it apart first. It goes up. Then you're going to get some kind of a bounce. After the close out here, you talk about getting taken apart. This is pretty intense. LinkedIn. We'll start with LinkedIn. We'll take a look at this. LinkedIn just came out with numbers. LNKD. LinkedIn closed at $250. It's trading at $196. You talk about a haircut, folks. This is like an extraordinary haircut. Let's see what they have to say. Well, here, let's go look at LinkedIn. And this is typical, by the way, folks, of markets that are going to go south, and they don't let folks out. If I learned anything, and this is kind of interesting. No, it's real interesting. In 2000, right? I remember after the NASDAQ got killed, you'd hear on TV many folks turning around and saying that, you know, people could have put the stops in, they could have done this, they could have done that. And just get something, I mean, I'm not a long-term holder, so it didn't affect what I was doing at all. But when I was hearing that, and I'm a huge believer in stops, huge, we put stops in all the time. But when I was hearing that, I was specifically saying, hold it, man. What are these people talking about? The NASDAQ, folks, okay, if people were around that market, or if they ever traded the real money, the NASDAQ, okay, I can absolutely understand why people didn't get out in 2000, because the NASDAQ went down like 35% in 6 weeks, okay? That's why you should have your stops in. So what I learned there is this, is that the markets never let you out, because theoretically and thought process-wise, it would make sense that, hey, you have a stop in, you get out, right? But what had happened inside the NASDAQ, and inside the S&P, you had plenty of time to get out. In the NASDAQ, you didn't. My point is that when markets are going south, they don't let you out. That's why you want to put stops in. That's why you should take profit objectives, though. That's the other side of it. Okay, we take a look at LinkedIn. What you have with LinkedIn is this. LinkedIn, man, this is going to be a disaster. Okay, so we're trading 188 now. This is going to be a total wipeout. So LinkedIn, the next stop for LinkedIn is, this is sick, 164. 164 is the swing high of May of 2014. This, and guess what? This can get to 164 today. What is that going to do? Let me tell you something. That is going to put selling across markets. Why? Because there's so many margin calls that are going to be out. It's going to be a wipeout. What happens? They sell them out, go to the next stock.